Hello, options traders. Welcome, everyone. Well, it was one of the most highly anticipated earnings report we've seen in a long time, and I did post about that on Facebook. But I'm talking about the earnings report from July 29th, 2019 for Beyond Meat. The thing has gone, well, beyond crazy since the IPO date. But once the earnings came out, the stock immediately started to tank, and of course, the financial press came out and said, here's why. And as I've talked about before, you have to be careful about the financial press. Remember, they're journalists. Nobody knows why the market is falling. But one of the things that they pointed to, and there's certainly some truth to this, was that Beyond Meat is coming out with a secondary offering. And this is kind of a complicated one. It's a little bit of a mixture. And I've received several emails from traders saying, is this 3 million shares going to dilute the market? Is it something we need to be worried about? Or even more commonly, what in the world is a secondary offering? So let's take a look at a secondary offering. First of all, understand that when a company goes public, they create this corporation, they have shares that are available to be sold, and they do that through what's called an initial public offering, or more commonly known as an IPO. So again, this is where companies offer to sell shares of stock to the public for the very first time. It's also called the primary market. However, when you and I see these shares trading, let's say on the New York Stock Exchange or the NASDAQ, it's actually the secondary market. So sometimes people will say, well, I bought that stock on the IPO or the first day it IPO'd. Chances are you didn't. You probably bought it when it first started trading on the secondary market. So the primary market is the time that it's really not offered in the trading platforms and out there on the NYSE and the NASDAQ. It's traded behind the scenes. A broker's going to call you up and say, hey, Mr. Account Holder, we've got this new stock coming out. We're part of the selling group here, and we'd like to offer you these shares. Do you want to take some shares here? That's the IPO. So once the company starts trading on the secondary market, it's obviously up to supply and demand. However, after that IPO, companies will often sell shares in addition to those from the IPO. And if they do, it's called a secondary offering. So a secondary offering is a second or more, could be a third or a fourth, offering of shares. And it's sometimes you'll hear it called a follow-on offering. Now here's where it gets a little tricky. There are two types of secondary offerings. You have one that's called non-dilutive, and you have another that is called dilutive. So in the case of Beyond Meats, it's a little tricky because they're actually doing a combination of two of these. So what exactly do these mean? Well, a non-dilutive means that we are not going to dilute the value of the stock. So let's say that we created a brand new company here. We've got 1 million shares of stock that we can offer to the public. But let's say that 400,000 shares were purchased by a venture capital firm. And this is quite common. Venture capital companies are one of many types of companies out there who will take high stakes risks in exchange for potentially high returns. And one of the things that they like to do is for startup companies to buy up a huge block of shares. And so they might do this and say, listen, we'll cut you guys this huge monster check, give you some capital to start working with, but we're doing it hoping that because we like you, we like your idea, we think it's going to be a huge home run. So yes, it's big risk and big return. However, these venture capital firms aren't allowed to sell on the secondary market for a period of time. There's what's called a lockout period, which is usually 6 months. But notice that once they do, that we would still have 1 million shares in our company. See, we didn't change the number of shares outstanding. We just changed who owns them. So if you have a secondary offering that is non-dilutive, what it means is that you are having usually venture capital companies, could be insiders, the CEOs, a lot of the founding members that have a boatload of shares that obviously are trying to unload them. They want to get some of this risk off their back. They put a lot of capital into this company. Now that the stock price is up and it's out there trading, yeah, they'd like to diversify that. It's one of the many reasons for having a market. So yes, you can expect a lot of these people will start selling when the lockout period ends. On the flip side, from non-dilutive, we have a dilutive secondary offering. So let's go back to our little company here where we have 1 million shares. But now let's say that the company says, hey everyone, we're going to issue another million shares. See, now we don't have 1 million shares anymore out in the market. We've got 2 million shares. That's dilutive. So let's say if the stock was $100 per share before this, it's now going to trade for $50 after. And that's assuming it doesn't send shockwaves to the market of everybody going, hey, what's going on here? And it absolutely plummets demand. But theoretically, it would basically be a 2-for-1 stock split. The difference is that you're not going to receive another 100 shares for every 100 shares you own. So if you had 100 shares trading for $100 per share, it's worth $10,000. You wake up the next day and see that it's worth $5,000 and going, what happened here? Well, the company just decided to throw out another 1 million shares into the market. And of course, you'd scream, hey, that's not fair. I just got diluted. And that's why companies don't like to do this that often. And it's also why investors tend to react very negatively, very quickly, when they hear the words secondary offering. So why would a company do this? Well, it's primarily to raise capital. Now, in the case of Beyond Meat, they issued 9.625, that's 9 5/8 million shares at $25 per share. Now, again, I know a lot of you might have said, hey, wait a minute, I bought that the day it started trading and I paid $40-something. And remember, that's not the primary market. That was the secondary market. The primary market, the true IPO shares, were priced at $25 per share. And so when they sold that, they raised an instant check of about $240 million. Now, that doesn't mean that's what the company was worth because they didn't sell all of the shares that they had. It gave the implied market cap of nearly $1.5 billion. If we multiplied that $25 per share price times all of the shares in existence. But now think about it. After the earnings, as I speak right now, the stock's just a touch above 200, but let's just say roughly 200. If you think that right now it's $200, it was $25 on the IPO, that's 8 times the value. That's a 700% increase in about 3 months' time. So, do you think that some of these insiders and these venture capital firms will want to sell their shares after that lockout period? Yeah, that would be my concern. So the company says, you know what, while the share price is high, let's go ahead and do a secondary offering and sell before the lockout period ends. That's why they want to do it, is to capture this high price. Now, just as a side note, I generally don't like to bash, but in the last couple of days I've talked about this and had a number of traders asking about, well, the financial media said this, and so said this is why the stock market's down today. And I've always repeated the same thing. Nobody knows where the market is going, and 99% of what you read out there on the web is from a financial journalist. They are not necessarily financial professionals. And here is a perfect example I couldn't help but throw out. So again, the stock's trading for about 200. It was $25 on the IPO. That is a 700% increase in value. And yet, look at what our financial journalist said. Beyond Meat is giving insiders a quick way to cash out after 800% post-IPO gain. It is not an 800% gain, it is 700%. So if the journalist can't even get the basic math correct, you have to say what else do they get wrong. So if I was a journalist, I would say this guy is 100% off. So anyway, back to Beyond Meat. What is so different about their secondary offering? Well, here's what they're going to do. They're going to sell 3 million shares that are non-dilutive. These are coming from some of the venture capital firms, for example, Kleiner Perkins, Caulfield, and Byers, one of the big stakeholders in them, filing to sell 600,000 shares. There's another one called Obvious Ventures that is filed to sell 350,000 shares. And then the balance is being sold by executives, primarily probably Ethan Brown, who is the founder and the CEO. So that's where these 3 million shares are coming from. Again, it is not changing the number of shares outstanding. It's just changing who owns them. Those are non-dilutive. However, in addition to these 3 million, they have filed to sell an additional 250,000 shares. Those are shares that were never in existence. These are brand new shares that they're just dumping onto the market, and those are dilutive. So now think about it, at $200 per share, That's another $50 million just because the stock has gone up 700% in a 3-month period. It's kind of hard to pass up. And that's why they're doing it. Now, the other thing you have to be careful of is the lockout period. Remember, these venture capitalists and these insiders cannot sell for a 6-month period. And for BYND, the lockout ends October 29th of 2019. So that is coming up just around the corner. And you have to say, what should you expect to happen? Probably going to be a lot of selling pressure. So what's the moral of the story? Keep your positions hedged because we never know what the market will do, no matter what a financial journalist may say. If you'd like to learn more about the art and science of options trading, please check out the Alpha Trader course and strategy lab from optionsaToZ.com. Also, please join us on the Facebook trading group Options A to Z, and you can find a link in the description below.